Today, I want to talk you into a health savings account or help you maximize one you already have. And I'm going to be going over 5 HSA hacks to maximize tax-free wealth. All right, I want to tell you where I'm going here. First, I'm going to talk about the triple tax benefits. You may already know that one. Second, though, I'm going to talk about don't save. Okay, hang on. I'm going to explain what I mean by that, but don't save. I don't want you to think of savings account here. Third, don't use it for medical or healthcare expenses. You might be like, what is he talking about here? Trust me, it'll make sense and it will maximize your health savings account. You'll make more money doing it this way. Fourth, I want to talk about reimbursing back in time. Don't reimburse now in your medical now. Reimburse expenses back in time. I'll get into that, why that makes sense. And then the last thing here, the fifth hack, is the last month rule. This is something super powerful for anyone setting up a new HSA or anyone considering a new HSA. Now, you may have heard about the triple tax benefits of the HSA. This is super popular. A lot of people know this, but I want to make sure everybody's understanding the main concept of the HSA and hack number one. That is, I put money in an HSA, I get a tax deduction. For an individual in 2025, that's $4,300. For a family HSA, which is you and a spouse or you and a dependent, that's $8,550 that I can put in as a contribution into this account, and I get a tax deduction on my tax return, reducing my taxable income, $8,550, so I have less income for the IRS to tax me on. Now, anyone gets that deduction. It's called an above-the-line deduction. You don't have to itemize to get it. There's no high-income phase-out. Okay, even Elon Musk could get an HSA deduction. Now, by the way, that contribution deadline is April 15th for the prior year. So we're sitting in 2025. You don't have to get the contribution in as long as you had an HSA in 2025. But that contribution is not due until April 15th of 2026. Now, remember, to have an HSA, you have to have a high deductible health plan. So that's a qualifying thing to have the HSA. But the big perk here is these triple tax benefits. Tax deduction when the money goes in. Second, when I invest the money and it's growing, I pay no tax on the investment returns. Every penny of investment returns goes back into the account and continues to grow the account. And then the final benefit here in the triple tax benefits is the money comes out tax-free for medical expenses. Now, we're going to get into some optimization strategies here later on, but when you're spending that money out for qualifying medical at any age, there is no penalty, no taxes. The money is coming out. Now, this is unique in the tax code. In the IRA world, I can get a deduction putting money in a traditional IRA. There's no tax as it grows. When I pull the money out of a traditional IRA, I pay tax on the way out. In a Roth IRA, I put money in, no tax deduction. Money grows as I invest it and comes out totally tax-free. The HSA gives you the best of both worlds, a deduction on the way in and tax-free on the way out. And in the middle, it's growing on the investments and the returns, paying no tax as well. That is the triple tax benefit unique to an HSA. The Roth IRA only has 2. The traditional IRA only has 2. That is one reason why people love the HSA. Now, we're just on number 1 there. I just gave you a triple benefit, but that is just number 1. All right, now the second hack here you need to know is don't save. We're not using an HSA to really save and put in a savings account. So many people literally have a savings account where they put in their $4,300 individual or $8,550 family, and that money literally sits in a savings account making no money at all. Hey, I'm cutting in here because I want to make sure you know all the stuff I'm talking about on my YouTube channel, investing in alternative assets, whether it's real estate or private funds or private equity, oil and gas, crypto, saving on taxes, all these concepts I love and I talk about here. I want to let you know we do this at my company, Directed IRA. So get on over to directedira.com/call and book an appointment with one of our self-directed IRA specialists that'll help you understand how to take control of your retirement. You need to invest your health savings account. This is super powerful. For someone who's growing and building wealth, they need to invest. Now, I want to show you here a simple example of why you will more than double your wealth by following this one hack. Now, let's look at an investment calculator here. I've plugged in some numbers, assuming what you would make if you put in $8,550 a year for 20 years, and you just put it in a savings account. And let's be honest, there's a lot of HSAs that have money just sitting at a bank in a savings account. All right, well, what are you going to have in 20 years if you kept contributing to that? Now, I've assumed you've taken no money out for medical. We're going to come to that here in a second. But let's just stay with the numbers here. $8,550 for 20 years, that's $171,000. You have no growth. In fact, the value of that money's gone down because of inflation. But if instead you invested that money, at least in the S&P 500, okay, the index fund, at least, I'm just giving an example here, at 8%, that would be $391,000. more than double the value by simply investing it. You're not having to work. Your money's working for you because it's invested and growing. That's how the wealthy make money. They don't save, they invest that money. Now, that could be done with a simple HSA at a broker-dealer. This could be a TD Ameritrade or Fidelity. I don't care what it is. And that's just doing simple ETFs or stocks. Now, you could even supercharge that. Maybe crypto is something you believe in and think is going to grow in value. You can do a crypto HSA at our company, Directed IRA. We have clients, HSAs, that have literally owned cows, small businesses, real estate, private funds. These are actually all assets a self-directed HSA can own. I've got other videos on how you can own alternative assets here, but just for purposes of today, I want to make sure you understand your HSA needs to be invested, whether that's in the stock market or in a private asset, it's in crypto, I don't care what it is. Don't have it saved and go backwards because of inflation. We want to invest and grow it. You will more than double the value of that, again, in this example here, over 20 years. And that's simply at an 8% return, okay? If we put that at 14%, you will more than triple or quadruple your money. And we've seen clients do that with their accounts here. All right, now third here, don't use your HSA for medical. You might be like, well, what the hell is the purpose of the health savings account? I thought I was supposed to use it for medical. Don't. Okay, remember, this is a tax-advantaged account. When I put $8,550 in there in the family HSA as a new contribution, why would I spend that $8,000 out for my family medical that year? That money in the HSA, when it's invested, it is not taxed. It's going to grow and come out for medical later. And I'm going to come to the strategy on how you optimize that. But for now, don't use it for medical if you don't need to. Now, this is the next level strategy here. Not everyone can employ this because you might be like, Matt, I need the money to cover medical. I don't have an extra $8,000 laying around. First level strategy of an HSA is if you've got medical, and this was me when I had my HSA at first. I had young kids going to the dentist, braces, medical coming up from sports or whatever it is. When I had a medical thing, I would drop in the $1,000 in the HSA and I'd spend it right back out to cover my kids' medical. That wasn't optimizing the HSA. That was level one. I was getting a deduction by putting the money in the HSA, but I was spending the money right back out for the medical because I didn't have extra money, okay? I had the $1,000 for the medical bill, but I also wanted the tax deduction for it, and that was the only way to get it. But if you want to optimize it and hack it, what you should be doing is not using it for medical right now, okay? You put that $8,550 in, this is a tax-advantaged account. It's going to grow and come back to you tax-free later. Hang on, I'm going to explain how that works. The nice thing about letting it grow is I'm spending money out of my regular funds, which if I invested those, I would pay tax on. Think of your brokerage account or savings account or other disposable income you have. Let that pay for your current medical now. Now, you're going to reimburse this later, so hang on, because you might be thinking, well, Matt, I'm just going to grow a big HSA account, and what the hell am I going to do with it when I'm 50 or 60 years old? I actually want to take the money out at someday and enjoy it. I'll get to that here. Hold on. That brings us to the next point. All right, now this is hack number 4, and it's going to tie it together because you're going to be thinking again, well, what the hell am I doing with this HSA that has all this money up and built in it? I haven't been using it for my medical. Well, there's a rule that applies to HSAs that says, as long as you had an HSA at the time you incurred medical, you can reimburse that expense at any time later on. So let's say, fast forward, it's 2045. You've had an HSA now for 20 years. You've been putting the $8,550 in, and you invested at 8%. You could probably do better, but let's at least say that. Your account's now worth $391,000. Now we're looking back and saying, all right, I want to draw on this money now. It's 2045. I want to start living on this money. I've built up this nice little savings nest egg, tax advantage. I've been growing it, paying no taxes as I'm building it. Now I want to access that money. Well, you can do that at any age. As long as you had an HSA at the time you incurred the expense, so the medical I had in 25, 26, 2027, 2028, 2029, that whole 20-year period, any medical I had in that period, I can reimburse myself now in 2045 or 2046 or 2047 or whatever year you want to. You're not forced to take the distribution out of the HSA at the time you incur it. Let the money stay invested, growing in the HSA, and then pull it out as a distribution later when you want to pull out the money for any of your living expenses. All right, now the 5th tip here, the last month rule. This is something that applies a lot at year end. We'll see clients that need to utilize this. And that rule says, as long as I have a high deductible qualifying health plan by December 1st, 2025, I am HSA eligible to make the full contribution, 4,300 individual, 8,550 family, for 2025. Now I don't have to get the money in until April 15th, 2026, but that qualifies me for a full year worth of contribution value. Now, this is applicable if you've changed jobs or are new to getting a high deductible plan. This will get you in the game to make a full year's HSA contribution. Now, the last tip I want to throw out here, this is maybe part B to point number 5 here, is don't wait for the contribution deadline to get your money in. Okay, Fidelity did a report about the characteristics of people that have the largest retirement accounts there. And one characteristic in common of people with large accounts in general making contributions is they contributed as soon as they could, not on the deadline. Okay, this is not homework in high school that we're putting in on the deadline. All right, stop doing that. Get the money in as soon as possible, because remember, we're investing it in a tax advantaged account. And if I get the money in as soon as possible, it's growing faster. All right, this money's working in your favor. So we want to get it invested as soon as possible, get that growth of the investment over time. Don't wait until the deadline to get it in. Now remember, of course, you're going to need the health savings account that can be invested. Okay, this is not the savings account. And if you have one of those, it's at a bank or a CD or some other place that just does savings, stop doing that. Get it over to a place where you can invest the dollars however you want to. Maybe that's a broker dealer that has a health savings account. Maybe you want to self-direct it and invest in a private asset like real estate or a private fund or a startup. Or you want the crypto HSA. We do those accounts at our company, Directed IRA. We would love to help you with that as well. But no matter where you set up the health savings account, these 5 hacks will help you optimize the health savings account and maximize your tax-free wealth. I'm Matt Sorensen. We'll see you next time.